Good day, friends. January of 2024 promises to be a busy month. On January 10th, we are expecting approval from the Securities Commission for Bitcoin ETFs from BlackRock, Fidelity, and other Wall Street sharks. And I would like to bring to your attention a back-calendar ratio spread that may work in this situation. There are different opinions right now. Some expect Bitcoin to grow and become more expensive than 50,000, but others expect a correction of Bitcoin, which has already risen more than 100% this year. So, how to capitalize on this uncertain situation in January? That's why I'm offering a back-calendar ratio spread. I open a January put option series with the first expiration on January 26. Put options of strike 43, and then in the March series I choose put options of strike 43 as well. I need to buy close options. I choose 1000 contracts for ease of calculation, and I sell the FAR options, also 1000 contracts in the March series. I get the following strategy. I shifted it a little to the left, so that the profitability zone on the growth would be closer. By choosing strike 42, for example, you can make the shift even stronger. The margin requirements are $1,778. The idea of the strategy is that with any price movement, up or down, we get a profit anyway, regardless of whether the ADF applications are approved or not. Regardless of whether a price correction occurs. I have little faith in that, but anyways. Let me remind you that the closest expiration of the part of our strategy will happen on January 26. As you can see, with the growth we have a serious positive delta and our P&L is showing good profits. If strong growth happen, we will get $1,400, $1,500, $1,600 of profit. Almost the same as the margin requirements needed to support this strategy. But if there is a fall in the price of Bitcoin, for example, some factor we don't know about comes into play and the price goes below 40k, we will also see a significant profit. If the price drop is very strong, we can make about $1,600. So, the back-put ratio spread gives us the opportunity to make money on any price movement. The key point here is that January will be a very eventful month that will definitely affect Bitcoin price movements. The most important thing for us in this strategy is that the price does not stay at the current level. We need any but significant Bitcoin price movement. If the price doesn't move, it is important for us to determine for ourselves the maximum possible stop loss. For example, our maximum loss is $200 or $300. And if this situation happens, which is unlikely, we should quickly close the strategy. Besides, it is possible to improve this strategy, for example by selling more March put options. The left side will increase its girth, but the right side will become higher. I only sold 50 March contracts, or you can try selling 1,100 contracts instead of 1,000. The profile of the right side gets even higher. This way, our strategy can bring more profit, up to $2,000 if the price rises. But if the price falls to $30,000, $36,000, we will get a profit of $600, $800. You can try to model this strategy yourself and adapt it to your own expectations. You can move the strike point by choosing a different strike, for example, 42,000. If you expect Bitcoin to fall, you can choose a higher strike. For example, 46,000 or 47,000. I find this strategy very interesting. You can use it, you can modify it to suit your preferences. So, choice is yours. As for me, I'm looking forward to January and significant price movements. If you liked this video, leave a like, share your opinions in the comments, ask questions, I will definitely answer them. Thank you for your attention, have a successful options trading.